All right, listen up, because a new player is about to crash the semiconductor party, and their IPO could send some serious shockwaves right through the heart of the AI revolution. We're talking about SJ Semiconductor, and we are about to tear it down pre-IPO style. I mean, really think about it for a second. These huge AI chips, they aren't just one single piece of silicon anymore. Nope. They're these complex puzzles made of smaller chiplets that have to be connected with just insane precision. So the big question is, who builds the super advanced Lego base plates needed to snap them all together?
For what feels like forever, one company has been the undisputed king of this incredibly high-stakes game. But a new contender has been quietly training in the shadows, climbing the ranks, and, well, they're just about ready to make their grand entrance.
So let's set the stage. This is a classic David versus Goliath story. You've got the undisputed champion on one side and the scrappy, ambitious challenger on the other. In this corner, weighing in as the heavyweight champion of the world, TSMC, the absolute king of advanced chip manufacturing. And in the other corner, the up-and-coming challenger from mainland China, SJ Semi. They're a specialist who's been quietly honing their craft and is now ready to make some serious noise. So, is the challenger for real, or is this all just hype? Well, to figure that out, you gotta look at the tail of the tape. We're diving into the technical specs, because this is where the fight is really won or lost. This number, this is the key to pretty much everything. It's called the bumping pitch, which is just a fancy way of saying the tiny, microscopic space between the connections that link all the chiplets together. The smaller that space, the more data you can cram through. And at 20 micrometers, SJ Semi is now running neck and neck with the champ. Hey, remember that Lego baseplate we were talking about? Well, this is it. It's called a silicone interposer. You can think of it like a circuit board on steroids, where all the different little chiplets get plugged in. If you want to build one of these monster AI chips, you have to be an absolute master of this technology. Okay, this table tells a fascinating story. Just look at the numbers for what we call 2.5D technology. That's the engine powering basically all of today's AI. Think of it like building a sprawling, high-tech, single-story city. In that space, SJ Semi is right there with TSMC. The experts are calling it technical parity. Now, TSMC, they still have a clear lead in the next generation, 3D stacking, which is like building skyscrapers. But for the race that matters right now, SJ Semi is a very serious contender. But you know, technology is only half the battle. SJ Semi has a strategic advantage. A hometown moat, you could call it, that might be even more powerful than its tech. And this chart? Wow. This isn't all, doesn't it? In mainland China, SJ Semi isn't just a player. They're basically the only game in town, controlling a massive 85% of the advanced 2.5D packaging market. So if you're a Chinese AI company and you want to build a world-class chip, you've got to go through them. This is their secret sauce. It's a bit of a mouthful called SCTO, and it's what makes them so sticky. See, they don't just build what you ask for. They get involved in the design process, like 18 to 24 months before production even starts. This means their customers' chips are literally custom-built for SJ Semi's factories. That makes it incredibly difficult and expensive to switch to a competitor. But, and this is a huge but, this deep integration has created a massive, glaring risk, a single point of failure that analysts are calling the golden handcuffs. This right here, this is the number that should give any potential investor nightmares. A staggering 74.4% of SJ Semi's entire revenue comes from just one single customer. And I mean, look at this chart. The point could not be clearer. We're not talking about a diversified business here. We're talking about a fire hose of cash coming from client A, who's a top-tier global chip designer, while everyone else is just a trickle. And the experts? They are not pulling any punches. The analysts at HDIN Research said that if client A decides to take its business somewhere else, the result would be, and I'm quoting here, catastrophic. That is the textbook definition of a high-risk, high-reward situation. But hold on. SJ Semi isn't just sitting around waiting for the other shoe to drop. They know this is a huge problem, and this IPO, this is their plan to break free. They are looking to raise a massive 4.8 billion RMB. Now, this isn't just pocket change to pay some bills. This is a war chest designed to completely reshape their business from the ground up. And their plan is actually pretty simple but brilliant. They're going to use the lion's share of the money to build out more factory capacity. Why? So they can finally start taking on more big customers and break free from their dependency on client A. The rest? That goes straight into R&D to close the gap on next-gen 3D tech. So let's put it all together. What is the final verdict on SJ Semi as it gets ready to go public? Here's the bottom line. Their strength? They are the undisputed king of their home turf. The weakness? They are chained to one single customer. The opportunity? A practically infinite demand for AI chips in a huge market. And the threat? Geopolitical tensions that could cut off their access to the tools and materials they need to even exist. So, SJ Semi has built this incredible fortress at home, no doubt about it. But the real question is this: can that IPO war chest help them build an empire before those golden handcuffs turn into a lead weight that drags the whole thing down? That is the billion-dollar question. Now, this entire teardown was sourced from pre-IPO analysis by the very sharp minds at HDIN Research. If you need this kind of deep insight into what's really happening in the market, you can reach them at sales@hdinresearch.com.